Hey folks, Rachana Ranade here and I welcome you all to yet another shoot and release video of P.N. Gadgil Jewelers IPO. This video is special because it's a Pune based company, and being a true Punekar at heart, I feel excited about discussing companies which belong to my hometown, right? Definitely we are going to discuss a lot in today's video, but before I move on, of course you know the drill, right? It's a shoot and release. That's why even just in case if I fumble upon something, if I mispronounce something or say some different information, please check out the pinned comment for any corrections. Plus, if you have not yet subscribed to the channel, this is the time. Just hit the subscribe button, and you can also you can also press the bell icon so that whenever I put up any video, a notification will pop up in your window. One more thing, if you want to apply for any IPO, obviously you need to have a demat account, and the link for opening a demat account is given in the description box below, right? So now, without wasting time, this is still loading. Let's get started. Okay, right. Well, this is a company which has a legacy of almost 6 generations in the jewelry business. It was started back in 1832 in Sangli, and almost 125 later, that is in 1958, Anand Gadgil, Vishwanath Gadgil and Lakshman Gadgil, this trio decided to move their business to Pune, and their first store was opened at Lakshmi Road in Pune. You might be like, which road? We don't know. I am from Pune now, so I have to say few things, right? And even Anand Kaka Gadgil was very famously known as Daji Kaka Gadgil. Okay. Well, what does the company do? This company is mainly, as I mentioned, it's into a jewelry business. So that is the reason why they sell gold, silver, platinum, diamond related jewelry. This is how it could look like. Okay, I'll not put this for a long time, otherwise even I'll start getting into that shopping zone. Okay, well, the flagship brand is PNG. Currently they sell products through multiple channels, including 39 retail stores, and also they have an online marketplace through their website. Now, how does this jewelry retail segment look like in India? For that, if you have a look at this chart, you can see that the overall share of organized jewelry in retail, which was like 0% till 1994, the organized retail jewelry has gone up and up and up to almost 27 to 37% from 2016 till date. So obviously, for any jeweler like PNG who is into the organized retail space, for them, this number 27 to 37%, this one that I was referring to, for this it's always going to be higher the better, right? Now, if I move on to the geographical segmentation, you can see that out of 61,109 million, that is almost 6,110 crores, 6,000 plus crores revenue comes from India. So it's a highly concentrated business in India. In UAE, they just shut down their store which they had in this year itself, and they have they have stores in USA as well. That contributes to a very small revenue though. In Maharashtra, if I'm talking about, Maharashtra, they rank the second largest among the prominent organized jewelers, and this second largest is based on number of stores, by the way. They have 29 stores which are located in Maharashtra, and they have 94% of their stores in Maharashtra only. Okay, so just to sum up this slide one more time, majority of the revenue comes from India. If I'm talking about India specifically, 94% of their stores are in Maharashtra only. If I were to talk about number of stores, it's 29 stores. Okay, so going to the product segment now, 92% of the revenue comes from gold, roughly 3.5 and 3.5 from silver and gold, less than 1% from platinum. Now, talking about the industry overview, of course, after China, India is the second largest consumer of gold. But if I were to go region wise, South accounts for almost 40% of the jewelry, I can say, consumption in India. Second largest is West, and in West also, Maharashtra holds almost a 46% share. So if I were to say 25%, ka 46%, that comes to almost 12%. So in simple words, I can say that if I were to talk about consumption of gold in India, Maharashtra accounts for roughly 12%. Okay. Now, going by again key players, of course, I'm again talking about retail and organized space players. The highest by store count basically is Tanishq, which is a Titan company brand. Tanishq has almost 60 stores in Maharashtra. P.N. Gadgil has 29 stores in Maharashtra. Third one is Malabar Gold and Diamonds. Okay, so on and so forth. But of course, here you can see, if I were to talk about total, this is very less in comparison with their peers, and that is the reason why we have to understand this, that their business is focused more in Maharashtra only. Now, if I were to talk 2-3 important terms today we are going to learn in today's video. For example, today we'll also learn, or those who already know this concept, it's a quick revision. This talks about inventory days, and always remember, inventory days, it's lower the better. What do I mean by this? If they were to make some specific jewelry, in how many days are they able to sell that jewelry? So if they are able to sell it in lesser number of days, it's going to be better because they are going to get money. That money will be used for another jewelry, and obviously every single time they are also going to earn some profit on that. So that is going to lead to more and more revenue, more and more profitability. So how many number of times are they able to churn that will be called as an inventory turn or something like that. So turnover will have a specific nomenclature, but you can just say in how many times are they able to churn their inventory. So if I were to do 365 divided by 63, it will come to 5 point something. So they are able to churn their inventory almost 5 to 6 times. We can call that as a stock turn also. How many times are they able to churn it? It's almost 5 to 6 times. So that will be higher the better. More and more churning they can do is equal to better for the company. But days, lower the better. Okay. Now, one more thing that they have mentioned in their RHP is that what they do is they also try and identify certain jewelry items that are not selling like hot cakes, right? And if that be so, they'll try and understand the reason behind it. If they feel that array, this design is not being sold in this specific store, but there is some other store that they own and that design is being sold in this store. So what they'll do is they'll transfer this item from here to here and they'll try and ensure that it gets sold off as quickly as possible, right? If they are not able to still sell it, then they'll ensure that they put up some sale on that so that it gets sold. So they are trying to do this very meticulously is what they mentioned in their RHP. Also, they have mentioned about footfall and average transaction value. Simple. Footfall means what? How many people are visiting their store? What is the thing here? Higher the better, obviously. Second is average transaction value. Means what? If people are just coming there for window shopping, it's not going to help them. What is important? People come to their store, they buy and then they leave, right? So again, higher transaction value, better it is going to be for them. So if you check, their footfall grew by 27.7% between fiscal years 22 to 24, and even their average transaction value has gone up, has increased at a CAGR of 16.46% for gold, diamond 22.69%, and silver for 3.05%. Now talking about key risks, of course every business has their own set of risks, and here if you see, huge chunk of the revenue comes from Maharashtra, and from Maharashtra also if you check, Pune accounts for almost 64.61% of the revenue. So is there a concentration, clear-cut concentration risk in Pune, in Maharashtra? Okay. One more risk is about a theft, risk of theft. This is a screenshot that I have taken from a YouTube channel, and if you have read about this, they had a store in, they have a store in San Francisco in USA, and it was a daylight robbery that happened in one of their stores, and it was looted by armed robbers. Now you'll be like, so what? I'm sure they'll be having insurance. Definitely they did have an insurance. They do have insurance for such, inventory which is maintained in stores. Now the only thing is that what could be the risk? Risk could be that what they have mentioned here. In case of losses due to theft, there can be no assurance that we will be able to recover from our insurer the full amount of any such losses in a timely manner or at all. So what is the risk? Number one, risk of not getting the full amount from the insurance company. Number two, they may get the full amount, but they may not get it in a timely manner. Okay. And number three, they are mentioning that if they are filing claims under insurance policy, it could also lead to an increase in insurance premiums payable by them. So, just understand that this is a risk which is not only for P.N. Gadgil, it's a risk for every other jeweler out there, right? So, we call such risks as inherent risks. Okay. Now talking about the litigations, if you are just talking about litigation against the company, it's almost 5.5 crores, against their subsidiaries it's almost 12 crores, and if I would club that up, that accounts for almost 11.5% of their profit after tax as at FY24. Talking about their financials, the revenue from operations has increased at a CAGR of almost 54.6%, EBITDA has increased at a rate of almost 39.8%, and PAT has increased at a rate of 49%. Financials, definitely CAGR is good enough. Even if you're talking about ROE and ROC at 28.8% and 27.31%. If you have been a viewer of my channel, you already know this, that anything above 15% is considered to be decent enough, right? Peer comparison, now only one point here is about the PE, because when we are talking about IPOs, ideally we feel that there should be some cushion left for the valuation game, for especially those retail individual investors who want to invest in such IPOs. For Kalyan Jewellers, PE is at 101, Senco is at 45, Thangamile is at 42. Now if I were to check the upper band of this IPO, upper price band is at 480, and with this the PE comes to 36.7. Okay, so lower as compared to its peers. That's what the PE talks about. Very important thing is how much is the total issue size. It's 1100 crores, 850 crores is going to be a fresh issue, 250 crores is going to be offer for sale. Now question is, what are they going to do with this money? They are going to use this for funding 12 new stores, opening up 12 new stores in Maharashtra again. So this is almost 392 crores rupees will be used for new stores in Maharashtra, and more stores they add, there'll be a clear position in second position. Because if you remember, if I were to take back, if I were to take you back to this slide, right now there's a difference of roughly 5 stores, okay, but now with 12 new stores addition, they'll be way above Malabar Gold and Diamonds, right? So this is one point. And second thing that they've mentioned, they are also going to do repayment and prepayment of certain borrowings. So obvious logic is that if they are able to repay their loans, their interest cost will be, there'll be a saving on interest, right? Interest cost is equal to less. It means that profit is going to be on a higher side. Higher the profitability, higher the EPS in general will improve their financials. Issue opens on the 10th, that is tomorrow, 10th to 12th. That's the price band for you. The minimum application and maximum application, this is for retail individual investors, and the listing date is expected at 17th September 2024. Do let me know your thoughts in the comment section below, whether you are planning to apply for this IPO or not. I hope you enjoyed this short summary of P.N. Gadgil Jewellers, and if you did, don't forget to share this with your friends. Don't forget to smash the like button as well. I hope you enjoyed this one. Till then, take care. Jai Hind and bye-bye.